Hey YouTube, my name is Lenford Morris. This is my first video here. What I wanted to share with you guys today is in regards to options trading or options in general. So I just want to share some ideas that I have here, kind of put my ideas out there and just really see where this goes. So I have a bit of a base in terms of trading stocks, right? So just understanding like buying, selling, shorting, covering, different indicators, different technical analysis patterns, as well as really understanding the underlying fundamentals of a company. Um, I used to do again some day trading, not really my style. I'm more into like swing and core trading now. But as a result, I fell upon just learning more about options, obviously just to increase my knowledge in this space. And I think I have something that I really like, and it's really, really interesting. So I know these are starting to become a little bit more popular now, but the poor man's um, covered calls, and as well as cash secured puts. So that's pretty much the strategy that I'm using here. So I want to show you guys something. I also have a couple questions for you guys as well. So this is my Interactive Brokers demo account. This is not a fully loaded account with money. This is strictly a demo account. I'm going to be demo trading this for about 6 months, and I really want to just get a good grasp on this. So I'm in Canada. The best option that I found is Interactive Brokers. I know you guys in the States have like Robinhood, Webull, right? We don't have that many options when it comes to options here in Canada. So I'm with Interactive Brokers. And again, this money here, it's not real money. Okay, it's not real money. But this is what I got. So I've got two Apple Leaps, right, deep in the money. So Apple right now is trading at, I don't know, 127. So I got these at 55, right? With a strike, sorry, with the expiration just about a little less than a year from now. Okay, I think I started this last week. But yeah, so two leaps, right? So long-term equities anticipation security, bit of a mouthful, right? So this is pretty much going to mimic the stock without paying, I don't know, 12.7 grand, right? So you could buy this. I think I got this leap for around $7,000. And again, it is fake money, but you could see the difference between 12,000 and 7,000. But at the same time, this is really, really deep in the money. Like, I think I could have gone away with like 85 and the 85 strike, right? Or even a 95 strike. But anyways, so I got two of those. Okay. So those are going to be my synthetic covered calls or poor man's covered calls. And then here I'm selling um, covered calls against it. With the March 5th expiration of this recording, it is March 1st with a strike of 134. Okay. So if we go back to the Apple chart, so 135 call, sorry, 134 call. Let me draw some lines here for you guys. So about, let's call it there, 134.10. Okay. So as you can see, Apple's, we had this really strong uptrend of support, but it broke that, right? So right now in the market, I know for last week was pretty much a bloodbath. The market was really, really dropping. Everyone's obviously speculating on different reasons. Um, the main one with in terms of the treasury yields, but hey, that's neither here nor there. But the main point is it broke below this support line. So by Friday, okay, so today is Monday, I'm betting that Apple's not going to get all the way up here, right? So as a result, I keep that sweet, sweet premium, right? I collected a premium, right, with the strike at 134. Now, either way, I'm still going to hedge my position, right? Risk management is the number one when it comes to trading in general. Even investing, it's managing your risk, hedging your risk. I'm going to be watching this when we're putting an alert. So say if it reaches like 133.50, I'm just going to roll it. Okay, so I'm going to buy to close this out and sell to open a new one. So I would, if it goes up close to it, say 133, I'm going to roll up and out. So up and strike, out and expiration. I'll probably do the week after, right? So I think that's March 12th. Okay. If it expires worthless, if it kind of just trades sideways, it pops here, pulls back, trades sideways, don't have to worry about it. I could let that expire worthless and then just um, sell to open a new one. Okay. So what else do I got here? So, okay, so that's Apple and that's the two poor man covered call, right, with the calls against it. Here I got ARC, so this would be a cash secured put. So I put ARC expiring March 5th with the put of 125. So let's check out ARC. What is ARC doing? Okay, so ARC. So again, if it drops to 125 right there, okay, you can see that's about no pulling back a little bit more to support with the wicks. Okay, then I would, if I get assigned, I would have to buy 100 shares at 125. But ARC for me and Apple, right? This is very important. These are companies or ETFs that I'm willing to hold in the long term. Okay, so if I get assigned, I'm not going to be worrying like, oh God, I'm in on some cheap garbage penny stock, and you don't want to hold that, right? That's, you end up being a bag holder. You end up, that's where you lose money. But I have faith in ARC. I also have faith in Apple. I think both these companies really speak for themselves. I'm obviously going to encourage you guys to do your own homework. This is by no means um, financial advice, but for me, these are already in my portfolio, and through this demo, I'm just using these because these are potential candidates for me to run this strategy with. Okay, so back to what I was saying. If ARC pulls back to 125 before Friday, I'll be assigned to buy 100 shares on 125. And ideally, what I do is once I get assigned those shares, then I would start selling covered calls against those. Okay, so say I get assigned, then I'll sell maybe a covered call at, I don't know, maybe 140. Okay, so just basically just keep the wheel going, right? Cash secured put, assigned covered calls, um, also get assigned on that, and then just continue the wheel strategy. Okay. So what's next? So that's with ARC. So I did that with Apple and Microsoft, right? Don't need to really repeat myself. Same thing. These are companies that I do believe in for the long term. They're going to be here for a while, and I think they're going to be going up for a while. This one here is interesting. So I ran the same idea on Palantir. Okay. So I was actually able to use like the option spreader. Let me see. Is that what it's called? Or the strategy building spread trader? So I went over to here. I think I typed in Palantir. Oh, okay, it's not loading. Well, it usually pops up everything here. Again, it is a demo account, and I'm also still kind of learning the platform. But either way, so Interactive Brokers has a system where you're able to run these, which is really good. I know that not every broker has this. I know I talked to Trade Zero; they say they don't have this, but you're able to run these strategies in a spread, right? So if your short leg gets assigned, right, it will automatically exercise your long leg, right? So you're not sitting there with a massive negative account balance in your account. So this platform will do that for you, which is really good. Okay, so that's what I did here with Palantir. Okay, that's why it's a little organized, a little bit different, right? So I bought deep in the money call at $5. Okay, um, and then I sold a March 5th call at $3.50. Okay, so I collect my premium. If it expires worthless, keep all the premium. If it starts to approach it, down, roll it. Right, even if I'm at a little bit of loss when I roll it, I'm still obviously selling to open a new position. Palantir, I also really like this company. The one thing I don't like about it, though, is that there's a lot of short interest against the company. I think 10% of their shares are shorted. So obviously it's creating a lot of downward pressure on the stock. But guys, if you haven't heard of it already, definitely look into Palantir. They're a data aggregate company. Okay, so that's that. And then, yeah, I already went over this part here. So that's pretty much my strategy. It's starting to pan out so far. Again, I pulled trigger on this, I think, last week. And then I saw it like go negative, positive, negative, positive, which is, it's the market, especially when it starts to take off. But I think Friday, I think the P&L on this was 1,800. And now today, as you can see, it's 2,700. So again, just testing on the strategy, I could see it's starting to really pan out. And again, I'm just really learning the platform. One other thing I want to show you guys here. If you actually right click it, this is going to allow me to roll the position right here, which is so nice. So if I go to Palantir, for example, I want to roll this call. I roll it. Okay, so here's everything here. So like I said, you want to go up and out in price, or sorry, and also expiration. So March 5th, March 12th, you maybe want to go higher in price. Okay, so we want to sell, right? So we would collect 22 cents in premium. Okay, so that's around 22 bucks in premium. Okay, but obviously first we're going to be buying back this one right here. Okay, and then we're buying to close this and then selling to open this new short leg. And then you obviously pick if you want to do limits or markets, and then you submit order. So I like that a lot on this platform. Okay. So yeah, that's about everything. That's my first video. I'd love to you guys to just get in the comments, share this. Again, I'm pretty new at this. I'm open to a lot of different ideas, and the internet's a sea of information. So if you have any couple ideas, feel free to shoot it my way, and we can have a short little discussion in the comments. I'm all ears. All right, cheers, guys.